Okay, here is a video about service firm accounts, and we're going to look in particular at the 2003 service firm account. It's for a company called Slimline Health Center. Um, and the shape of this question is very reminiscent and very familiar to those people who have already studied club accounts. At the start of the year, you have all of the assets and liabilities on the first day of January. And then in your receipts and payments account, you have all of the money in on the debit side and all of the money out on the credit side, incomes and expenses, but they need adjustment. And then at the end of the year, you have some further adjustment information which needs to be taken into account. So, um, like with the club accounts, what we're going to do is we're going to isolate the two first workings, what used to be bar trading account and subscriptions. Here in this question, it's going to be a shop trading account because the health center has a health food shop, and it's going to be clients' fees because instead of subscriptions, it's clients' fees. So we're going to isolate those two and do them first, and then we'll seek out what other workings need to be done. So let's have a look at that. Now, here is our shop receipts, 67,000. Here are our shop purchases of 41,300. If there were debtors and creditors in the question, just as in club accounts, they would have to be factored in there. There aren't in this question. However, there is an opening stock of health food in the shop. There is a closing stock of health food in the shop, working number one. And then I want to draw your attention to this note number 5 here, where it says wages and salaries include €16,000 paid to the receptionist who also runs the shop. It's estimated that 60% of this salary and some light and heat, insurance, and telephone is all attributable to the shop. Well, that's going to make up the basis of our first working here. So what we're going to do is we're going to do our health food shop profit and loss account. This is the same as our bar trading account. It goes down as far as the gross profit here, exactly the same. With your shop sales, opening stock, purchases, takeaway, closing stock gives you a shop profit. But then it does tell you that there are some expenses. Wages, 60% of 16, and light and heat, and telephone, and insurance. And all of those are expenses, which when you take away, you'll find that the net profit for that actual health food shop is 15,220. And that is an income, that 15,220. So it's a trading, like a bar trading account, but with some specific health food shop expenses, 4 of them there. Now, however, if we count this 9,600 of wages here, then we cannot also count it in the general wages figure, or else we will be counting it twice. So therefore, for each of these 4 things now, we need to remove the shop aspect from the overall health center wages, light and heat, insurance, or telephone, because this shop is only part of the overall health center. So therefore you go with your wages here, and the wages are from the question. I'm not going to keep flicking back and forward, but I will show you where these are coming from. Here is our wages number. Here is our telephone and our light and heat and our insurance. Those are all expenses. So you're going to take your wages and you take out that shop receptionist wages from this figure because you're instead paying them with relation to the shop. So actually the wages for the remainder of the health center are 78,640, and that's an expense. The light and heat, you do the same. You take out the shop light and heat. We don't want to count it twice, of 220. But with light and heat, we also have some other information. If you look at working number 1, it does tell you about heating oil, and it does tell you about electricity due at the end of the year, and it does tell you at the start of the year there is also opening stock. So therefore we need to factor that in to our working, and it is opening stock of oil we add on, closing stock we take away, electricity due we add on, and you get your profit and loss figure there of 3,270. Of course, the stock at the start of the year is a current asset, or an accumulated fund asset. At the end of the year is a current asset and a current liability for ESPG. I'm using the term accumulated fund, even though in service firm accounts it's not actually called an accumulated fund, but it's the same thing. It's reserves at the start of the year. Now, then we have our insurance. You take out the 600 from the total number and you get 5,700, which is for the rest of the health center. And you have your telephone and you take the 18,880 and take out 360 and you get 1520 for the rest of the health center bill. That's the first full working, but in fact it's really 5 workings in one, but that's our health food shop. Now, then I said that we will do clients' fees secondly. Now, I'm going to go down to here for a moment. You guys can just focus on working number 2 in this top left-hand corner. The client's fees. Well, if I look at the question for a moment, here are the client's fees, 262,600. There are client's fees at the start of the question. It says paid in advance. And then there are also client's fees referenced in note number 3 and 4 at the end. Some which is paid for the year 2003, which is next year, and some which are due at the end of the year or in arrears. So the same rules apply that we've learned many times before. You are going to take your client's fees, you're going to add an amount prepaid at the start of the year, and that would be an accumulated fund liability. You're going to take away an amount prepaid at the end of the year, and you're going to add an amount due at the end of the year. And altogether, that's our client's fees of 264,750, and that is an income. Okay. Now, once you have exhausted those two, then you look to the top sentence and you see, is there anything else which is due or prepaid? Well, when you look up here, you see that there is contract cleaning prepaid, and there is creditors for supplies. Both of those, straightforward enough. Here's our cleaning, here's our purchase of supplies, and here's our cleaning figure. So therefore, we'll need to just do both of those workings. So here's our cleaning of 2,700. You take away an amount prepaid at the start of the year. It's an accumulated fund asset. Excuse me, you add an amount prepaid at the start of the year. Take away at the end. You're left with 2,600 as an expense. With supplies, it's the same. This is supplies for the remainder of the health center, not for the shop, but for the remainder. So you take away creditors at the start of the year, add on creditors at the end of the year. That's your profit and loss figure for supplies. Again, the same as it would be for what we've learned in club accounts. Now, then what else is due or prepaid in the top sentence? Well, I don't see anything else as such, but my mind is drawn to this particular one here, which says all fixed assets have 3 years accumulated depreciation at the start of the year. Now, our fixed assets are the buildings, the equipment, and the furniture. So therefore, what you need to do there, and we've seen this before in club accounts, you need to work out how much depreciation will be for the 3 years prior to the 2000 and, excuse me, the date on that, the 2002. Okay. So, buildings are 520,000, and of course by 2%, but by 3 previous years is 31,200. Equipment is 90,000 from the top sentence. By 20% by 3 years is 54. And furniture is 25,000 by 20% by 3 years, which is 15,000. Now, what do you do with those numbers? Well, in the accumulated fund, you take away those numbers. So it is buildings. How did I get this 800? Well, that is the 520 minus the 3 years depreciation. How did I get this equipment of 36,000? That's the 90, take away the 54 that we've just calculated. And this is the 25, take away the 15 that we've just calculated. So that much depreciation has already been taken off before you do your opening reserves or your accumulated fund. Then, of course, you have depreciation for this year. And how do you get that? Well, down here you're told, of course I should have pointed out this, that this is where I got these rates. I got those rates down here of 2, 20, and 20. Down here you're told that this is the depreciation for this year. Well, it's almost the same, except you do have to bear in mind that in here you have built a new extension onto your buildings and you have bought new equipment. So therefore those numbers are going to be slightly different. Your buildings instead are going to be 600,000. That's the 520 at the start plus the extension. And that's by 12%, or sorry, by 2%, but by 12 months, so it's just for 1 year. Equipment is the 90 at the start plus the 16 at 20%, which is 21,200. And furniture did not change, it's just 25,000 by 20% by 12 over 12, which is another 5,000. It's 5,000 every year, that's the fourth year of that. These three numbers are the actual expenses, and they go in the expenses section. And I have an NB over here where in the balance sheet, the accumulated depreciation and this year's annual depreciation must be combined. So for example, for equipment, in the finance or in the fixed assets, you have to take this 54 and you have to take this 21,200 and add them together to get, I'm just going to bring you down here to show you, to get that 75,200, which is the total depreciation. This 20 is the 15 from the three first years plus the 5 from this year. And why is this 0? Well, this is 0 because the question does then ask us to revalue the buildings. I'm just going to go back to the question for a moment here. And once we go down to here, you'll see all of these workings here. Have we done them all? Here's our closing stocks. We've done everything in there. We've done our cleaning. We've done this client's fees. We've done working 5 and 7 and 8 now. But we haven't done the revaluation. So the revaluation is quite simple. We've done revaluation before. You have to put in your buildings of 600,000. This is how much depreciation you have for the first 3 years plus this year's depreciation. And then you wish to revalue up to 700,000 and cancel all of that depreciation. So you need 100,000 from the debit side here to the credit side. And you need this 43,200, cancelling both of these from the debit here to the credit. And now that gives you 700,000 as you wish your buildings to be. It gives you 0 depreciation. And it gives you a revaluation reserve of 1,432. The only working remaining is the loan working. This is the same as we would have had at club accounts. Do you see this repayment of the loan? It's a 60,000 euro loan together with 17 months interest, and it was repaid on the first day of June 2002. So therefore 5 of those months is for this year and 12 was for the previous year. So this is our loan repayment working. You work out how much the interest is, which is 6,800. You divide that by 17 months and multiply it by 5 and 12 respectively, and that's where they go. That's all of the workings, guys. Now, I'm just going to show you this answer, but of course you'll be following this anyway. You put in your company reserves, but it's basically an accumulated fund, all of the assets at the start of the year, including your bank account, taking out those early depreciations. And all of the liabilities, including the loan and the loan interest due, and that gives you your accumulated fund, except we call it reserves, at the 1st of January 2002. In the profit and loss account, instead of an income and expenditure account, it's a profit and loss account, and this is 15,220, adding on the client's fees and the interest received straight from the question. And here is our expenses, several of them. You get the net profit, and then you add on the reserves from Part A to get your running profit and loss balance. And then finally in the balance sheet, I've already explained about how you get these depreciation numbers. Don't forget you had investments at the start of the year, they're still relevant to you. You add up all of your current assets, current liabilities, you work down and you get your finance by section. There's no theory on this part, but there will be when the questions get a bit more challenging. That should be enough for you to give this question a go, and best of luck.